So what are those characteristics that you'll tend to really drill into? And if you wouldn't mind using private markets as maybe the baseline example, I'd appreciate it.
We've been investing in private markets within that OCIO role, since the late '80s, and so we were one of the pioneers in that. I certainly wasn't here back then, but have private market experience throughout my career. But we do have that experience, and I would just say on the front end, like if you're going to be a median private market manager, you should not you should not be making those investments, right? Of course, nobody goes into it thinking they want to be, the median type of manager, but it is so vitally important to, make sure you're partnering with and working with those GPs that are top tier, and that's what we've thankfully been able to do within that OCIO role. Let's say a financial advisor, wealth manager already has exposure. They might have exposure to private equity. They might already have exposure to private credit, kind of that, that lending, kind of middle market lending. And so I think what we're seeing is, what are those RIAs and financial advisors looking for right now? If you look at it into that context, so moving away from the OCIO, but moving into that space, we think we're not gonna come out with an also ran in that space. We want to be different. So how can we be different? And I think that's listening to them, talking to them, and trying to figure out if they do have that exposure already to private equity and private credit. How can we be complementary? How can we have something that will kind of complete their private market portfolio? And that could be kind of like an asset-backed financing, kind of what we might call specialty income, that might have mid double digit types of return streams that would be different though from what they already have.